Good morning, I'm Chris Beecham and these are your morning market headlines for Wednesday, the 5th of September, with the FTSE down around 20 points at 56.50. Now, global growth rise continue to affect investors this morning. A weaker ISM report from the US yesterday afternoon followed on from poor Chinese manufacturing data early in the morning to create the impression that the global economy continues to struggle, illustrated by the fact that iron ore prices hit a 3-year low overnight last night as demand continues to weaken in its most important area, China. Meanwhile, FedEx, which is often considered a useful gauge of global economic sentiment, warned last night that profits for the quarter ended of the August 31st would be below expectations, sending the shares down at 2% in aftermarket trading. Meanwhile, in Europe, as we get closer to the long-awaited ECB meeting, the spread between the short-term and long-term Spanish bonds continues to widen, reflecting the fact that we expect some sort of action from the ECB on the short-term end of the curve. But the continuing gap between the two suggests that perhaps investors aren't too sure that the action taken will be enough to stem the crisis in the longer term. And meanwhile, in corporate news, it's the end of an era for EasyJet. The company announced that it would abandon its no reserved seating policy after feedback from customers, and instead it will allow the company to charge for pre-booked seating in advance, or customers can just turn up on the day. This is a cornerstone of EasyJet's policy in the beginning, and its abandonment reflects an interesting change for the company, and the shares are 2% higher in early trading at around 540p. On the economic front today, it's a fairly quiet day after the accidental release of UK services PMI data yesterday, with only European retail sales and the ISM New York index out this afternoon in the US. We expect a fairly weak start for the S&P 500, down around 7.5 points at 1398.